Hey y'all, welcome back to my channel. I'm the Gen Z Accountant and welcome to another episode of Real Talk with the Gen Z Accountant, where we have tough financial conversations that you need to hear, but it's coming from the heart. Today we're going to be discussing about co-mingling your funds in your business. This is something that I have experienced, that I know other people are experiencing, and it's just like a major issue when running a business. And if you don't know what co-mingling your funds are or what it is, it's basically when you have one bank account, or you can have several bank accounts, but your bank accounts are being used for your business transaction and your personal transactions. This is like a major issue. The reason this is an issue is because, for one, it makes it super unorganized and it's hard for you to really know what's for your business and what's for your personal life, because you could buy something from Amazon for your business and for your personal life, but when you look at your bank statement, you just see Amazon. So that's a reason why it makes it very unorganized. Secondly, if you use like automatic accounting software where the software will automatically categorize your stuff, it could make that jumbled up and unorganized, which is going to make your financial statements, such as your profit and loss statement, very unorganized and not unorganized. It's going to make it incorrect because it's going to say you have an expense. Let's say that you have an expense for your rent, your personal home rent. It's going to put that on your income statement, and now you have more expenses than what you really have in your business, and it's going to show that you're losing money when in actuality you could be actually profiting. Secondly, if you are a business owner who is an LLC owner, meaning your business operates as a limited liability company, when you start to mix together your business and personal life when it comes to your finances, like on credit cards or your debit cards, you're now doing what's... The reason this is an issue is because, for one, it makes it super unorganized and it's hard for you to really know what's for your business and what's for your personal life, because you could buy something from Amazon for your business and for your personal life, but when you look at your bank statement, you just see Amazon. So that's a reason why it makes it very unorganized. Secondly, if you use like automatic accounting software where the software will automatically categorize your stuff, it could make that jumbled up and unorganized, which is going to make your financial statements, such as your profit and loss statement, very unorganized and not unorganized. It's going to make it incorrect because it's going to say you have an expense. Let's say that you have an expense for your rent, your personal home rent. It's going to put that on your income statement, and now you have more expenses than what you really have in your business, and it's going to show that you're losing money when in actuality you could be actually profiting. Called piercing the corporate veil. This is just a fancy word of saying that protection that the LLC gives you from any lawsuits or any debt collection from your business, it is now being tampered with because you're mixing your funds. And in the case that you do get sued or you do have debt that you're having issues with, those debt collectors can now come after your personal assets because you've pierced the corporate veil by mixing your personal and your business finances. So it is just very important that you are just keeping these things separate altogether, and it's very simple to do, which we're going to get into later on in this video. But now I'm going to talk about my experience with commingling funds in my business when I first started my business early on, and the issues it has caused me, so that I could prevent you from going through it or help you from continuing to go through it. Okay, so I'm trying to think, my first like business where I was like taking it serious and actually using it to pay bills and stuff was me being a hairstylist. So, and I did my own hair myself. Let me know if y'all like it in the comments. But yeah, so I was a hairstylist first, and I was making some good money doing hair. But in the beginning, I wasn't always so financially managed and, very knowledgeable of finances. So this is how I would run my business. I honestly, now that I think about it, I don't think I necessarily pierced the corporate veil where I was mixing in my finances. But what I was doing is not necessarily, I guess, commingling. Okay, I wasn't necessarily having one bank account to mix all my finances together. But what I was doing, because I felt like early on when the COVID happened, a lot of people on social media was saying like, get a business bank account, do this, get an LLC, do all that. So I had my LLC and everything like very early on, not even really knowing too much about it. And I had my business bank accounts really early on too. But what I was doing that was really causing me some hardships and made me lose a lot of money not gonna say lose it, but maybe spend a lot of money, is I was using my one business bank account as like a piggy bank to just like whenever I needed money, I would just go to it, get a little bit, do what I gotta do, transfer it over to my personal bank account, spend it. I need to get some food, I will go to my business bank account, transfer it to my personal bank account, and buy the food. It was time to pay my car note, I would go get $500 or whatever how much my car note was, send it to my personal bank account, and spend it. And this created a terrible habit of overspending and just spending without even thinking, and caused me to not only lose a lot of money, but I didn't even really notice when my money was starting to get lower, because as long as there was money in my bank account, that's all that mattered, which is a terrible, terrible way of trying to say if you're doing good or not in your business. Do not do that, okay? Actually keep track of your finances, track your transactions, make financial statements, and make decisions like that. Don't base it off what your bank account is looking like. So yeah, that was my issue when it came down to commingling funds. I wasn't, like I said, I wasn't necessarily commingling as far as like using one card for everything, but I kind of what I just explained to you, I categorize that as commingling because it's like it wasn't no distinction of this money is for my business and this money is for my personal life. Like it was just one sum of money, and if I needed it for my business, I would spend. If I needed it for my personal life, I would spend too. So that is the quickest way to lose a lot of money and not even notice that it's being lost. I now have a solution to that issue to prevent you from overspending and to prevent you from having a messy bank statement, which is what you're going to do each month is first, you need to, of course, separate your bank account. Have one for your personal life, one for your business, okay? That's the first thing. Once you get that in order, you need to figure out how much money do you need to send yourself either each month or bi-weekly to pay for your personal obligations or your personal life. Okay, so let's say that you need $2,000 a month to pay for your home rent, pay for food, pay for your car note, all that, okay? But you made, let's say in your bank account you got $10,000. You can decide if you want to split it up and have $1,000 1 week. I mean, $1,000 1 week, and then maybe 2 weeks later do another $1,000. Or if you feel like you're comfortable enough to manage your finances, at the beginning of the month, you can send over that $2,000 to your personal account and then pay for your personal bills like that. By doing this, you are setting up some parameters and some like guardrails to prevent you from just taking money every time you feel like you need money. Because I'm telling you, every time you do this, it's just impacting your business in a negative way. So that's just like a easy solution I have for you. It's basically like paying yourself every month. It's going to help you to not view your business bank account as a piggy bank where you could just take money whenever you need it. You now know how to not commingle your funds and not pierce the corporate veil. If this video was helpful to you, let me know down below in the comments. Like this video and share it to a business owner that you know who could be benefited from this video. If you want to know more ways on how to become a financially managed business owner, then make sure you check out my book, Loose Money Gets Lost. It's a financial management book. Here she is right here. She always back here looking real cute. But yeah, so it's a financial management book that helps business owners to make the best financial decisions. I talk about piercing the corporate veil and commingling in this book, along with many other wonderful things to help you have a long-lasting, thriving business. So all you have to do is check out the description box for the link, or you can search on Amazon, Loose Money Gets Lost, and she will pop right up. So yeah, in this book, like I said, actually let's go to the exact page where I talk about commingling. I feel like that was the irresponsible habit that I put in here. Yep. Irresponsible habit number 6. Here you go right there. What'd I say? You commingle personal and business funds. What is commingling? Commingling is mixing personal money with business money. Actually, let's read a little snippet, a little reading of my book to end off this video, because I feel like this video was a very quick video. So let's talk about the irresponsible habit and read it over real quick, what I said. Irresponsible habit number 6. You commingle personal and business funds. What is commingling? Commingling is mixing personal money with business money. I've already mentioned the importance of separating your business and personal finances several times. This shows how crucial it is to avoid doing it. When it comes to your business and personal finances, it is vital not to mix the two, both for legal and organization reasons. I said that in this video. As we discussed in section 1, when you register your business as an LLC, you receive personal liability protection from creditors and lawsuits that occur in your business. But if you begin to commingle your business and personal funds, you risk losing that protection. I told y'all that in this video. What this means is that if your business were sued and owed money, and you're using your business bank account to buy personal clothes, go out to eat with your friends, or pay for personal vacations, your car, your home, or any assets you own could now be used to cover the debt. This is because the IRS can't clearly differentiate between personal and business funds. Since it's hard to tell, they will treat everything as one entity and make it liable for the payments due. I'm telling y'all, it's serious out here. You do not want to be commingling your funds. This is why it is very important not to mix business and personal finances if you want to maintain the asset protection that comes with an LLC. Solution: avoid doing the following to prevent commingling. Using one bank account to purchase both personal and business items. And 2, accepting payments into a bank account that is not associated with the business. Just like that, you now understand how to prevent commingling in just a few different chapters. I think it was one chapter, a few different paragraphs. But yeah, so if you want more information like that, then check out my book down below, listed in the description. I hope this video was helpful to you again, and if it did, let me know in the comments down below, and subscribe for more content like this. I'm the Gen Z Accountant, and I'll see you in next week's video. Peace.